Okay. Hi. It is your friendly neighborhood mortgage loan originator, Emilo Cherise. Hi, guys. Um, Today I decided to I decided to go ahead and go live. Let me see if I can adjust this. Okay. I decided to go ahead and go live and talk about some things that I've heard, conversations I've had, things I've discussed with agents, learned about, heard about, all of that. When it comes to purchasing a home, we can say purchasing a home, purchasing real estate, however you want to phrase it. Um, if you are new to my content, I am a licensed mortgage loan originator. I am licensed in Alabama, Arkansas, Georgia, Tennessee, Mississippi, and Texas. Meaning I have taken classes. I have a license. I work for a uh, a mortgage company. Um, and the information that I give you is based on knowledge of the industry that I work in. And I wanted to talk a little bit about the things that people believe um, keep them from buying a house. So what I did was I posed a question in my stories. I said, and I asked, why don't you own a home? This is specifically for people who want to own a home. There are people who like, hey, I'm a free spirit. I'm gonna rent for the rest of my life. I can't commit. But people who want to own a home, I wanted to know what they felt like kept them from owning the home. Um, so also I have to if you guys know me, y'all know I do not spend a whole lot of time live. Like I have recorded content, I have recorded videos, but being live is not something I do a lot. But I wanted to give people the opportunity to, ask questions in real time about the things that they feel like keep them from purchasing a home. So what I'm gonna do is I'm gonna pull up a couple of the answers to the question that I asked and talk about what people have said back about why they don't own a home or what they believe stops them from owning a home. So the first answer I got to why don't you own a home is because all the homes that I like cost $1 million. My question to a person who feels like the homes that they like cost money outside of their affordability, does that mean you keep renting forever? um do you have a goal in mind? It's like, okay, well, the houses that I like cost $1 million. Let's say they really do cost $1 million. Do you even know what you'd have to do to be able to afford that house? Have you spoken with an agent who, if they're responsible, will direct you to a lender? Have you spoken with an agent or a lender to who would tell you, okay, you want $1 million home, this is what you need to do? There are a lot of people who get stuck renting until they're 40 and they don't want to because they believe, well, they one, underestimate what they can or cannot do, or they have no clue what they really have to do. Because let me tell you this, there, unless you have given the coaches and the financial people or whoever on the internet your social security number so that they can pull your credit history, and you've told them your income and showed them your pay stubs and done an application with a specific address or without a specific address, because a pre-approval doesn't require a specific address. But if unless you've given them your information with your credit and your income, nobody on the internet can tell you what you need to do to purchase a home. They can tell you all day, oh, you've got to have this credit score. They don't know that, because there are people with a 700 credit score who can't get a house. Because what matters is what happens when you talk to that lender, when they give you the information about the loan programs that are available. They may tell you, oh, well, you just need to do this and you can buy a house. What you need to do is talk to a licensed mortgage loan originator so that you can start the process. So let's say you have a house. It costs $1 million and you send it to a mortgage loan originator and say, hey, Sharice, let's say you send it to me. You say, Sharice, this is the house I like. These are the types of homes that I like. Can I get this house? The first answer is yes or no. And if the answer is no, then the next statement is no. But if you do this, this, and this, you can. So a lot of times people have talked themselves out of purchasing a home or even starting the process because they have decided in their head, based on what they've heard, what their mom had to do, what their cousin did in 2007 before the market crashed. They have all of this anecdotal information or secondhand information, and they haven't spoken to a lender or a loan officer themselves, and they've decided, oh, that's not something I can do right now, or I'm going to do it at this point. Or they'll say, okay, I'm going to apply for a house when my credit is 700 and I make $100,000 a year. And then they'll get to, credit scores of 700. They make $100,000 a year, but now they're 40. And $1 million, and $180,000 doesn't go as far as it used to when had they purchased, 10 years ago because they qualified, they just didn't know it. And then they bought a house for 110 and they can sell it today for 250 and get, over $100,000 in profit to purchase their new home. I said all of that to say, if the houses you like are very expensive, what is your plan to get them? And where did you devise that plan? What is it based on? The conversation starts with speaking with the mortgage loan originator. If you were to tell me that, it is highly likely that I tell you to buy another house and then sell that house to buy the $1 million house. Because at the end of the day, you're going to keep paying rent because you have to live somewhere. Unless you're going to move home. And if you got parents you can move home with, hey, fantastic. But for the majority of us, we're going to continue to rent. We're going to pay somebody to live where we live. Why wouldn't it be yourself? And people might say, well, the houses that I can afford, they're in neighborhoods that I don't want to live in. If you look at the current landscape of just our city, but any metropolitan area, to be clear, almost none of it is extremely safe. Almost none of it is going to keep you, keep your belongings super safe, keep your things super safe, keep you out of harm's way if you live in an urban area. That's just how it works. So, and if you do want to live in a place that is, super nice where there's almost no crime, what you're paying, you probably can't afford that rent either if you can't afford a mortgage. So I want a lot of us to challenge ourselves to make a decision that may not make a decision that creates a stepping stone to get where you're going, instead of holding out and waiting for something to flip. Because if we're thinking realistically, if you make $45,000 a year this year, it's highly unlikely that next year you're going to make $150,000 to take you from being able to, afford the houses you can afford now to, getting this windfall of money and being able to afford this $1 million house. The time that it takes you to build the salary that you feel like you're going to need, the market is going to change. It just like today, a house that was purchased in 2020 for $250,000 is probably worth at least $325,000 now in 2023. So in 3 years, what $250,000 bought is completely different than what $250,000 can buy today. The time that you spend waiting without a plan from a professional is time you spend essentially not doing anything. So I would encourage us to speak with a loan officer. And it doesn't, first things first, speaking with a mortgage loan originator is free. Legally, we cannot charge you for anything, any service that we provide, unless it is a tangible service. Like if I wanted to, I don't do it. Nobody really does it. The only thing I could charge you for is running your credit, and I could only charge you what I paid for the credit report. So it's not like you have to save money to speak with a loan officer. We are not allowed to charge you for our time. We get paid when we close on houses. So it's always in my best interest. And you can't close on a house that you don't qualify for. So it's always going to be in my best interest to get people into homes that they can afford, and get them to the closing table. Because unless I get you to the closing table, I don't get anything. So I just want to start with that. I want us to truly think about if we say, I cannot afford the houses that I like. Let's think about how long is it going to take you to afford the houses that you do like? And what do you think the market is doing while you're waiting? 2, the plan that you come up with to afford that house. How do you know that it is a feasible plan if you have not spoken with a professional who tells you what is required based on your information to get the houses that you require? And 3, is it the worst thing in the world to live in a home that you may not want to live in forever for a period of time to build equity, save money, and be able to create an investment in the life or the home that you want? Because there's also, if you buy a house, let's say we're in Memphis. So let's say you aspire for Shady Grove homes. But right now you can afford a Parkway Village home, a Westwood or Whitehaven home. Who's to say that when your income has changed, like I said, you've built equity. So if you sell the house, you get your equity back. Or 2, who's to say that home doesn't become an investment property where you're making rental income or Airbnb income while also working whatever job you work to afford the home that you want to live in forever? The term starter home exists for a reason. People take time and take money to invest in a home that they may not want to live in forever, but they realize that it is a stepping stone to the place that they want to be forever. If you buy your house and hold it for 3-4 years and it appreciates $100,000 in value, that's $100,000 that is your money that you can use for whatever when you sell that house. And for most people, it's putting down on a house that they want to be able to buy, that they would want to grow old in and have their grandchildren in. So I want to challenge us to think a little bit farther out than I live in an apartment and when I move, when I purchase, I want to purchase the house that I'm going to live in forever. Unless you're currently living below your means in your apartment or wherever you rent, it's highly unlikely that you're going to go from renting to forever home on your own. There are people who rent and they wait for a partner because they don't want to purchase a home, alone. That's the thing. I've heard it a lot. But sis, if you want to buy a house with your husband, you can do that too. It's not like you have a one house limit per life. Buy a house. And you meet that man and y'all decide y'all love each other and y'all want to get married, sell your house. And then y'all do the whole thing over again together. But y'all ain't even ignorant because you bought a house before, so you bring knowledge to this transaction. You bring value to this transaction. That's some, a little influence for him to pay the mortgage. Baby, I brought value. I brought knowledge to the transaction. So I do the knowledge, you pay the mortgage. Whatever you want to do. But buying a house in 2023 doesn't mean that if you meet the love of your life tomorrow, you can't sell your house in 2 years and y'all have some money to start on y'all forever home. So I want us to think about the things that we feel like are obstacles and analyze if they're truly obstacles and who told us that they were. So that was just my little spiel about homes you can't afford. You can't afford them today. But you want to know what makes a house easier to afford? Having tens of thousands or $100,000 in equity from the sale of another one. That's what helps. So another comment I got was, I didn't have all the money saved for the expenses that come with home buying. So, upfront costs are an obstacle that people experience when they're purchasing a home. For example, buying a $250,000 house is going to be down payment. The minimum down payment that you can pay is 3%. So that's already $7,500, and that's just the down payment. You also have to have a year of escrowed insurance, escrowed taxes. That's going to be a few $1,000s usually each, based on, of course, the property that you're purchasing. So you're plus, paying for the title search and things like that. So it could cost, a $250,000 house could push you upwards of, $15,000 to $20,000 at the closing table. So that is a legitimate reason to say, hey, I don't think I can afford it. However, there are down payment assistance programs all over the place that can help you. Now, before you get married to one in your head, speak with a licensed mortgage loan officer to help you understand how the programs that you see work. A lot of down payment assistance, the majority, a whole lot of down payment assistance programs are loans. A lot of them are what we in the industry refer to have a silent second, meaning they are a silent loan that you don't have to pay back for a specific period of time. And as long as you make your mortgage payments and don't sell or refinance your house during that period of time, you never have to pay it back. So it essentially becomes a grant, but they call them forgivable loans. There are down payment assistance programs that are grants. A lot of community banks have those to offer. And when I say community bank, I mean a bank with branches that you can usually go to make your mortgage payment. That's a community bank. And then there are some that are repayable down payment assistance programs where they're going to loan you the money at closing, and then 2 months later when you start paying your mortgage, you start paying them back. They do have decent interest rates, or sometimes they're the same interest rate as your mortgage loan, but they exist. So the upfront costs can be intimidating, but the key is to speak with a professional who can help you explain ways around it. There are people that I've spoken with who had money that they could use for down payment and closing that they didn't know that they could use because they thought it was off limits because they hadn't retired yet. The key is speaking with a licensed, knowledgeable professional who can tell you the do's and don'ts and the cans and the cannots of the upfront money. And then, for example, you can use your 401k and it doesn't have to be a loan. You can withdraw from your 401k generally to purchase a primary residence. They don't really be fooling with it for you to buy a second home because, like, you're doing a lot. But if you need a primary residence, depending on your plan, but almost always you can withdraw that money. You know, you pay tax penalties, but you don't pay, but you aren't prohibited from taking that money to purchase a home. And then, of course, on your taxes the next year, you say, hey, I bought a house, and then you get those tax credits. So while those upfront costs can be intimidating, most mortgage loan originators can help you find the money to at least get some assistance and help tackling those upfront costs. For example, City of Memphis down payment assistance programs recently, like within the last couple of weeks, and I spoke with somebody at the office today who confirmed that because last month one of my clients got City of Memphis down payment assistance programs, down payment assistance in the amount of $10,000. That was the limit last month. As of now, they are giving up to $25,000 in down payment assistance with a 5-year silent second. Yo, you hear that lingo? So what 5-year silent second means is that there's a secondary lien on your home for 5 years. You can't sell your house, and you can't refinance it because a refinance, pays off any mortgages. So you can't sell the house. You can't refinance it for 5 years, but they will, at the end of those 5 years. I'm working. This is like a work video. What you think I'm talking about?
Loan stuff.
Yes. So can you let me finish the loan stuff?
Just make sure your hair doesn't shrink and fall off.
Okay. John, bye.
Don't shrink.
Bye. Thank you so much.
And this is medicine. Cuffs.
John, please. I'm working. Where you daddy?
I don't know.
Okay.
Bye-bye.
Bye. Bye, John. But like I was saying, the City of Memphis last month it was up to $10,000. As of now, it is up to $25,000. They have a 5-year silent second where for 5 years you live in the home, make your mortgage payments, and you don't default on the loan, don't sell it, don't refinance. That $25,000 is forgiven. So there are ways, and of course, there are parameters that you have to meet to get the down payment assistance, but you do not have to be destitute to qualify for it. So the way that you know about these things comes back to speaking with a professional. Honestly, social media has a lot of good information about a lot of things, but the mortgage process is too varied, it is too detailed, it is too nuanced to blindly follow what you hear in a clip or you see in a video or on a graphic. It is a very personalized experience. The numbers are very personalized to your situation, to your home, to the specific home, to your credit, to the zip code. Everything is very, very nuanced when it comes to a mortgage. So while for a lot of subjects, general information works, for mortgages, it is just not the same. Oh my God. It's just not the same. So you speak with a professional about whatever. Even if you just have a question, you don't say, hey, Sharice, I filed for bankruptcy 2 years ago. Does that mean I can't buy a house? Sometimes yes, sometimes no. But it depends on your specific situation. It depends on your type of bankruptcy. The key in all of this is speaking with a person who knows what they're doing, who is properly trained. And it's not just, oh, I took a course here or there. I'm licensed in several states. I had to complete education in all of those states, except for Arkansas. They're a little lax. I don't know. They kind of laid back over there. But, specific education on state laws, state practices, all of those things. It is very important to speak with a professional about buying a home. The other answer I got was I do not own a home because I'm poor. So, in my opinion, the word poor is subjective, but even for people who are, let's say, below the poverty line, whatever it is right now, there are often options for you. The biggest key is if you don't have a ton of income, that's fine. That happens. Everybody doesn't make $1 million. But it is important that you manage your credit responsibly, that you make on-time payments, and that you are consistently employed in some form or fashion. So while you may not make one of my clients this year, she did not make what people would call, she was not wealthy. She did not make a whole lot of money, but she ensured that she also did not have a lot of debt. And the debt that she did have, she paid it, and she paid it on time. And what was crazy is she did not make a ton of money, but she did not get assistance. She budgeted and saved a lot of money to pay her closing costs and down payment. Her case was one of discipline and budgeting because she had a goal and she wanted to reach it. She bought a big old house. Keelan found it somewhere, like a big house with like a pool, and she was able to do it because she had the goal in mind. This is what I want, and what I want in the future, I have to make decisions and sacrifices in the present. And so being poor does not keep you from owning a home. There are homes in any kind of affordability category that, we have available here in the city. And there are people who pay over $1,000 in rent, and they'll say, "Oh, I'm poor." Well, you can afford to pay $1,000 in rent, or $1,500 in rent, or $1,800 in rent. They're often, unless you want to continue to rent, you may have to make some changes about, even if it's, I'm going to live beneath my means. Keelan talked about that today, and that's not really a thing people like to do. It's like, look, I can afford it, I'm gonna do it. Well, if you spend all of your time at the top of your budget, if you spend all of your money, hold on. Well, if you spend all of your time at the top of your budget, if you spend all of your money, hold on. Well, I don't know how to. Give me 1 second. Let's do this. If you spend all of your time, if you spend all of your money at the top of your budget all the time, if you make, $3,000 a month, and you are gonna spend $1,000 every month on rent, you're probably never gonna be able to save, have any assets, have any reserves. So for some people, it is taking a step down from what they want in the moment to spend a little bit of time, where it may not be, 100% ideal, but they're positioning themselves for this to be temporary and what they want to be permanent, as opposed to what they have, which is not what they want permanently, but they're stuck with it permanently because they don't want to transition in another direction for a temporary time period. So if I want to be a homeowner and I've decided I want to be a homeowner, when I'm renting, whether I'm renting in Cordova or Whitehaven, I'm still not getting what I want. So, am I going to perpetually not get what I want by remaining a renter? Or will I not get what I want in Whitehaven temporarily while I prepare to get what I want permanently? Does that make sense? So, a lot. So one of the comments I got, hey cousin, is that she wants to improve her credit. So where are you checking your credit? Where you should be checking your credit is the same place where lenders check your credit. My FICO is an app that pulls a ton of different credit scores. Mortgage lenders, they specifically look at the 5, 4, and 2, I think, are the mortgage scores. But they're listed in the My FICO app as mortgage scores. The same scores that you see in that app are the same scores that I will see when I pull your credit. So if you want to improve your credit, you have to know what it is first, and you have to see what lenders see. What we see are FICO scores. So you download My FICO. It's a subscription. You pay for it once a quarter, and they keep you up to date every single day about, what your scores are, where they are, how much you owe, how many times you've been late. All of that information is available in that app. The biggest thing is a lot of people are like, oh, I have to pay these old collections off. 99% of the time, no, you don't. What affects your score more than anything is open revolving credit. So you have a credit card and you like, well, my credit card ain't never late, but the limit is 500 and you keep the balance at 493. That's hurting you much more than yes, Dorian, it is. My FICO is correct. So you paying that, I pay my credit card every month, but it's right there at the limit. That's hurting you a lot more than a collection from 4 years ago. A lot more. So if you want to improve your credit, the biggest thing is any accounts that you have open right now, pay them on time, and keep the balances as low as possible. That is what you want to do to improve your credit. Speaking of credit, a lot of people think that you have to have like a 700 credit score to be able to qualify for a home. That's not the case. To the lowest credit score that you can get to get an approval is 580. Now, most people won't give you an interest rate or any type of assistance at a 580, but the absolute bottom is a 580. Where you're comfortable, where you're most likely you're going to get an interest rate, you're going to get and usually qualify. You can even qualify for down payment assistance in most cases at 620. 640 is really the sweet spot of, making sure you're not going to get any pushback. You'll qualify for the down payment assistance programs. You'll get an interest rate. You'll have at least an okay interest rate or insurance rate. So 640 is kind of where you really want to, if you're working on your credit, shoot for 640, but you don't have to be all the way at 640 to buy a home. And 640 isn't the highest credit score. It goes all the way up to like 850. I don't know, my credit ain't that high. But, so 640 can be a goal, and it's a mortgage score. So what you see on Credit Karma and what you see on, I think, Credit Sesame, that's not the same thing that I see. Those mortgage scores, and they don't move as much as those credit card scores and those auto loan scores. Those mortgage scores don't move as much. So they aren't truly moved. Like people like, oh, I want to see if I qualify for a house, but I don't want to lose no points when you run my credit. Most of the time, your mortgage score is unaffected by one inquiry. Secondly, if the 3 points that you're going to lose for getting an inquiry are a concern for you, then you're not ready to buy a home. The thing about it is, most people are much more ready than they believe. And it's all about their mindset the majority of the time. Almost every time, it is your mindset. You have told yourself what you can't do. A professional hasn't told you that. Social media might have told you what you can't do, but a professional hasn't told you that. Because anytime you talk to one of us, you're going to say, what do I need to do? Or do I qualify? Nobody's just going to say no. We're going to say, well, right now, this is where you are. But if you do A, B, and C, we can get you where you need to be. So what I would like to submit to you guys today is, my DMs are open. My email is open. My mortgage phone number is 901-240-0933. Call me. Text me. Even if it's just a question, message me on here and say, hey, I want to buy a house. What do I need to do? I'm going to tell you to download this app, do this application, and we can talk about it. You drunk your brother lemonade? Now I got to give him mine. But
it was good.
I bet it was. I know it was good. Move.
Hey, what's happening?
Get out of here. But that is what I want to say today. I want you guys to take a second and say, I want to buy a house. And we'll walk through, you download the application, you upload your documents. If you're ready, we can do it. And I'm sure there's almost nobody where it's just there's no way you can get a home. There are very few situations where that's a thing, and even in those situations, it's a matter of time passing. But your daddy coming, and I told you 3 or 4 times to get out of this video because I'm working. But there are very few situations where it's just out of the question. Like, if you filed Chapter 13 bankruptcy last week, no, you can't buy a house today. But it's a matter of time passing. It's never out of the question for forever. Ever. So, call me, text me, message me, or email me. And we can talk about how to get you into a home. It's truly just that simple. Because even if you don't walk away with a pre-approval, you walk away with a plan. And if you have a plan and you work it, then the next step is a pre-approval. So, sit with that, take it back, and let's talk about how to get you, into a home. Coming probably early next week, I'll be opening up paths to pre-approval again. Last time I think we ended up with 5 in the cohort. We ended up with 2 pre-approvals and 1 closing in just the past couple of months. I worked with 5 people. That means 40% of them were already ready. The other 3 needed a plan, but 40% of the people that I talked to were already ready. One of them has closed, and the other is exploring options. They have not closed yet, but they are absolutely pre-approved. And none of these people thought that they could purchase a home. So I'll open up paths to pre-approval again next week, but I wanted to get on here before and just, put a bug in your ear to challenge what you've told yourself about owning a home. Because in a lot of cases, it is not as far out of your reach as you think. But like I said, call me, text me, DM me, email me, and we can chat. Until then, I'm MLO Sharice, licensed in Arkansas, Alabama, Georgia, Tennessee, and Texas. And you guys just hit me up. Y'all have a good night.